Hello, today we're going to talk about the ASML, a Dutch multinational corporation developed and manufacturer of photolithography system. It is the largest supplier of photolithography system primarily for the semiconductor industry. It's the sole supplier of extreme ultraviolet lithography, aka EUV machine in the world. EUV is the most needed machine for any chip foundry to produce most advanced chips. With its current monopoly of the supply of EUV chip making machine, ASML stock is a guaranteed win for stockholders for next decades, regardless of if we're in a bear market or bull market. ASML's primary business is its lithography solutions, DUV and EUV, which are machines used to print semiconductors by global foundries. Semiconductor industry is the most critical industry in the world, which is parallel to oil industry. Semiconductors are used in electronic and other most advanced technologies, AI, 5G, EV, VR, military weapons, smartphones, and you name it. It is crucial for global tech companies as well as countries to have enough semiconductors to ensure their competitive advantage both in business and national securities. Among ASML's customers are global leading chip manufacturers, Taiwan Semiconductor Manufacturing Corporations, Samsung, Intel, and SMIC. TSMC alone has about 28% of global chip market shares for 40 nanometers or smaller, and are suppliers for Apple, Nvidia, and AMD. These global technology giants are heavily reliant on TSMC to keep their business demand, and TSMC depends on ASML's equipment to keep its business growing. Same story for Samsung, Intel, and SMIC. ASML's refusal to sell EUV to SMIC due to US sanctions pretty much means that SMIC will not produce any advanced chip for a decade or even more due to ASML is the sole supplier of EUV. ASML is not the only company to provide a lithography solution, but it is the most dominant one with 62% market share, and it is the only one can manufacture EUV, which is required to produce most advanced chips. Its competitor Nikon and Canon can't compete simply because their technology is not on par with ASML yet, and were not able to catch up for quite some time. According to report, global semiconductor growth was 13.7% in 2021. The global semiconductor foundry market was valued at around $100 billion in 2021 and expect to grow to $161.2 billion by 2027, registering compound growth rate of 7.5%. We can be safe to say that the ASML will be the major beneficiary of this growth. So we already know that ASML is in the leading position to be the supplier of global chip foundries. Let's look at the recent ASML Q2 earnings release to see how the company is doing and what's its projection for its future. Net sales come in at 5.4 billion euro, slightly above their guidance. ASML shipped 14 EUV systems and recognized 2.0 billion euros revenue from its 12 EUV system in this quarter. Net system sales around 4.1 billion euro, which was driven by logic at 71% and remaining 29% from memory. Net income in Q2 was 1.4 billion euro, representing 26% of net sales and resulting in an EPS of 3.54 euros per share. ASML slightly beat revenue estimated by around 1.54% and the EPS earning beats about 0.39%. ASML had a strong customer demand in Q2, resulting in net system booking of 8.5 billion euro. Company estimated about Q3 net sales between 5.1 to 5.4 billion euros, which is on par with Q2. Net delayed revenue recognition around 1.1 billion euros. This is due to ASML conduct fast shipments because of a supply constraint issue. Basically, after finishing building the equipment, ASML will ship products to customers right away and conduct tests in their sites, which will reduce about 1 month ship time. The shipment is recognized in current quarter. However, the total revenue will not be recognized until the test is done and customer signs off. And because of this, the total 2022 sales growth rate will be 10% due to fast shipment, and the parts of revenue will be not recognized until 2023. Gross margin in 2022 will be slightly lower, between 49% to 50% instead of 51% as previously projected, due to inflationary pressure driven up costs. But ASML is confident about their capacity to grow its business simply because customer demand is not slowing down. Sure, there are recessionary fear that could potentially affect their short terms, but because of ASML, customers such as TSMC and Samsung are still building foundries to keep their chip making capacity in long term, they're not canceling orders due to fear of a recession. ASML still receives significant new orders. Its backlog has grown to 33 billion euros, and 85% of its backlog is higher pressed EUV. And because of the backlog, ASML projects to produce 60 EUVs in 2023 and 375 DUVs, and it has a backlog of more than 100 EUV as of right now. Therefore, it's well covered for 2023 despite the recessionary fear. ASML also has gradually increased its dividend payment to investors over the years. In Q2, ASML paid the final dividend of 3.7 euro per share, together with interim dividend paid in 2021, result a total dividend for 2021 of 5.5 euro per share. We can see a huge jump between 2020's 2.75 euro per share to 5.5 euro per share in 2021. Also, companies start to pay dividend quarterly starting Q3, which is good news for investors. In Q2, ASML repurchased 2.3 million shares worth of 1.2 billion euros, and they expect to buy totally 12.4 million shares under 2021 to 2023 program for total worth of 7.9 billion euros. ASML has accumulated share buyback will be worth 20 billion euros since they started the buyback program. As investors, we like to see companies that being consistent in buyback shares is signs that the ASML have healthy financials. Now let's look at some more financials compared to ASML to its industry peers. If we look at the stock rating on Stock Rover, company has an excellent growth score at 98. It projects sales growth of 15.6% in 2023 compared to industry average of 13.4%. EPS growth of 27.9% in 2023 compared to industry's 20.1%. Companies also scored at 98 in profitability compared to industry average of 75. Its gross margin, operation margin, net margin, ROIC, return on equity are all above industry average, with the exception of return on assets slightly below. From valuation perspective, the stock is expensive with 37.7 PE ratio compared to industry PE ratio of 20.2. However, the stock has experienced significantly pullback from its all-time high of 759 euros to 522 euros as of right now, which is a 32% pullback, which is largely due to stock market drop since the beginning of 2022. With the average target price of 722.8 euro per share from analysts, ASML has a potential upside of 35%. Overall, I believe ASML stock is long-term buy for investors simply because it's cutting-edge EUV alone. By 2025, ASML expects about 2/3 of total system sales will be EUV, and the rest will be DUV. ASML is leading the future of technology because it enables making of smaller chips. Semiconductor industry will accelerate the adoption of EUV multi-pattern and new forms of EUV. TSMC, Samsung, and Intel's are already using ASML's current EUV machines to make chips using latest crop of computer and smartphones. I believe investing in ASML is equivalent to investing in the semiconductor biggest chip makers. However, there's no guarantee that the stock will not be tumbled into a new low if we experience a serious recession. If that happens, I'm just going to buy them at an even cheaper price compared to right now, since it's almost a guaranteed win in long term. So if you are interested in this stock, please do your own research and form your own conclusions, and I'll see you next time.